us know like the office fees or the NAR fees, what fees are write-offable or whatever?
All right. So business expenses. Once you have enough business, I would hire a CPA to manage your business and hire somebody that knows the MREA book that can balance your finances with the MREA economic model so that they keep you in the percentages and guidelines of what the MREA says. Okay, there's my disqualifier. Now, that being said, as I already mentioned, I didn't hire somebody to do my accounting or my books until I was like 13 and a half years into the business because I'm stupid and slow. Okay, so don't be like Amy and don't wait that long, but you don't have to do it like year 1 or 2. You want some business and you want to be able to support that because it is a monthly expense that you have to take care of. Yes, those are you that are thinking, well, I could just do my own books. Yes, you absolutely can. Just like you can do your own transaction coordinating and you can do your own photography and you can do your own. And that doesn't mean that you should long-term. Short-term, it's okay, right? We should all learn how to do some transactions on our own before we hire a transaction coordinator. You should understand the financial side of things a little bit before you hire a CPA and have money coming in to cover that expense because we want to lead with revenue. But I absolutely recommend hiring somebody and taking that off your plate. Everybody should have a separate account for your business expenses. Okay, and then pay yourself out of that account when you have money coming in. All of your expenses should come out of that account and all your income should go into that account. Okay, that will be the number one easiest way to keep track of things. In addition to that, I recommend getting something like a QuickBooks Small Business or something along those lines that has the capability to image capture your receipts. So when you have purchases that are business related, you automatically take a picture of that receipt and it adds it to that transaction because now that paper file doesn't really have any bearings anymore. We have copies of everything already online, ready to go with that year's accounting. That's the number one thing that I started to do right before I hired a CPA. And that's what I would highly recommend doing from the get-go. It's not that hard. Take pictures of them because what happens with receipts is the ink, it fades and the ink is getting cheaper and cheaper and it fades faster and faster. Right? Like 6 months into the year, you go back and look at receipts and you're like, I have no idea what this is for. You can't even read it anymore.
Yeah.
So get a program that allows you to take pictures of those receipts and uploads it into the system so that you have it all together in one place.
Sorry.
Go ahead.
When we take that picture, then can we shred that receipt or do we still need to keep that receipt?
I am not a tax professional, nor am I employed by the IRS, so I don't know the official answer to that question. However, I would just throw it in a folder and keep it.
Okay.
So that you have it in case you ever needed to pull it out to prove, but you've got the picture of it, which should be sufficient.
Yeah.
You can ask a tax professional for the appropriate answer on that, but I would have both.
Okay.
I would probably
Heather,
go ahead.
my tax guy, 7 years.
No, you have to keep copies of it, but once you have a digital copy, that is a copy. You don't need the necessarily paper copy, but check with your tax professional to make sure that you have what they need, but usually digital should be good.
I also found out that QuickBooks has a miles tracker that you can add, when you put it on your phone, it'll track your miles as well.
Yeah, so there's lots of different mileage trackers out there. I would test a few. Your mileage is a write-off with your vehicle. Again, I'm not a tax professional, so check with a tax professional, but you can write off either your actual vehicle expenses for a vehicle used for business or your mileage. Mileage is a lot easier. I like Mile IQ. It costs money. It's like 40 or 60 bucks a year. And I like Mile IQ because it tracks every single drive that I do. I don't have to turn it on and say this is a business drive. I don't have to say this is a personal drive. At the end of the day, I can open Mile IQ and swipe one way for business and another way for personal. And it's really smart. So if I have a listing or a buyer transaction and it's an address I go to all the time for that business, once it notices that, hey, you've gone to this address a couple times and it's always business. Do you want me to always log this as business? You say yes. And then it'll automatically log those drives in the future so that I don't have to do it. So I like Mile IQ. I've tried a couple others, nothing. It's been probably 3 years since I tried anything else. However, that being said, when I tried the other apps, they just weren't as intuitive or as smart as Mile IQ, and they didn't track everything I drive. Like every single thing I had to remember to like turn them on or have the app open in the background or like all those things. And that was way too much work for me. I can't hardly remember to tie my shoes. That's why I usually wear slip-ons. So
They said too on this morning on the,
meeting.
yeah, the NS car meeting, I don't know how to say it. Some people say it different, but they said that, yeah, they were talking about taxes and they said, don't forget to do your mileage. A lot of people don't do it and it's actually gone up to 58.5 cents a mile.
And you don't realize how many miles you do. Like
Yeah.
it's thousands of miles a year that I drive for business. That's now
Yeah. Yeah, so they were saying that and they said, don't forget your meals, because the meals and entertainment are 100%
100%,
deductible. Huh?
100% right now.
Yeah, ouch. So,
Yeah, and I do recommend hiring a tax. So even if you don't have somebody doing your books on a monthly basis, your profit and loss and all of that, I do highly recommend hiring somebody to do your taxes for you, especially once you start having income coming in, because they will help you find loopholes and
mhm.
things so that you can get as many write-offs as possible. They'll think of things you haven't. Okay. Now, there was a question of what can we write off? Again, you're going to want to talk to a tax professional, find out what you can and can't write off. That being said, on your commission demand, the fee, the transaction fee, so you don't get 1099 for the income that's taken out for your cap. So when you have your commission demand that we covered last week, there's part of it goes to your KW Vaca Valley as part of your cap, and part of it goes to KWRI as that $3,000, right? Those you don't get 1099 for that income. So whatever income you make, it's going to be your income minus that. Also, you guys should not be 1099 for your mentor portion of your commission, nor my portion of your commission, the PC portion. I get 1099 directly from the office for that income. You guys don't have to worry about that. The transaction fee, the $150 transaction fee, that is your write-off. So that is part of your 1099 income. And anything else that you pay out of your demand is part of your 1099 income. So if you pay a transaction coordinator, the transaction fee, if you pay a photographer, if you pay a stager, if you pay for repairs, if you credit a buyer or a seller through your demand, anything like that that shows up on the demand outside of PC, mentor, and your cap, those are all part of your 1099 income, and you own those write-offs. Okay. The other thing that you want to be aware of is that anytime you pay somebody for a service, goods or service that's over for business purposes, that's over, I think it's $600 now. Check with your tax professional. You're going to need to 1099 that person, which means that if you have a photographer that you pay on a regular basis for listings, usually like 2 listings, now you've paid them enough that you have to 1099 them come the end of the year. So you're going to want to make sure that you get their tax information, their tax ID number and address so that you can 1099 them. And again, this is part of the reason that I do recommend hiring a tax professional to help you with this, because those have to be cut and mailed out before the end of January. There's a lot of little caveats and loopholes to that is really stupid. And I think at some point it's going to catch up to everybody, but that's all right. If it's a corporation that you're paying, you don't have to 1099 them. You only have to 1099 sole proprietors. And then like, if you pay them through like a Venmo or the Cash App, or even I think like the QuickBooks online payment system or whatever, then you don't have to 1099 them, because Venmo is supposed to 1099. Like, it's really stupid. So at some point, anyways, but
So
higher
just sorry, Amy. So for the company that you use, that you recommended, the 39 pixels. So that's a company, so we wouldn't have to do that. for them?
You'd always ask, but no, it's actually a sole proprietorship with a DBA of 39 pixels.
Oh, okay.
So he gets technically 1099. Then like my transaction coordinator gets 1099.
Oh, okay.
Okay.
Okay, so
Um,
we just need to ask them, just because we're new, so we would just ask them like,
Yeah, so anytime you go to pay a vendor, whether it's a junk hauling service or whether it's you're paying for pest repairs or you're gonna pay for a pest inspection because it's pre-listing or photography, or you're gonna pay somebody to put out your open house signs, like as part of that first, like before I pay you the first time, I would ask for the, I think it's called W-9 form from them so that you have that. And then that way, you know, and they may be like, oh, I'm a corporation, or on that W-9, it'll show that they're a corporation. Then you'll be like, oh, I don't have to worry about these guys anymore.
Okay, so who is your CPA? Spill the beans, Amy.
My CPA isn't taking any new people right now, and she's on the East Coast. She was referred by my coach, and it's Leighton Consulting is who does my books on a monthly basis. My tax person, I'm actually in the process of finding a new tax person because last year at tax time, I fired my tax person because they were doing my taxes wrong. And I filed my own taxes last year because it was in a time crunch because they delayed so long on getting on the ball to do anything. And I was really irritated and upset, and I filed my own taxes. So I am in the process of talking with a couple people about doing my taxes this year.
So who is that person so we don't use them?
You won't use them. It was Streamlined Accounting Services is who was doing my books and my taxes last year. The year before last, 2020.
Gotcha.
Question.
Yes.
Warranty goes under deductions then deductions.
Yeah, it would be a deduction
Okay.
if you paid a home warranty. And so again, this is where it comes down to a tax professional and how they decide to categorize it, right? Where if you get a good one, they're going to say, okay, perfect. That's an advertising expense, right?
Okay.
Because you're paying for the home warranty with the hopes that they're going to refer more clients to you.
Okay. Well, okay. I meant, I guess no, that makes sense. That does make sense, but I meant more for the demand that it would be a deduction.
Yeah.
Okay.
Yeah,
Okay. Okay.
Yep.
And you said the Cutco, when you do your name and stuff you have it engraved on the Cutco knives and stuff like that, that's a deductible, that's 100% write off?
Yeah, that becomes a marketing expense rather than a closing gift. A closing gift, you're limited on how much you can write off per closing, whereas if it's a marketing, then you're not.
You're so smart.
I've had lots of help.
do you ever notice all Amy's people are never taking new clients?
It's a conspiracy. She doesn't want us to follow.
My photographer is definitely taking new clients. They're happy to take your business. They're happy to drive over from Stockton. I'm done cheating on my photographer. It's not worth it. I really like my photographer.
I need to get their number from you, actually.
All right.
Is that the one that does the 3D or the video? I don't know. What do you call it when it like maps out the house? Do they do that?
They can do Matterport. It's called Matterport.
Okay.
And they absolutely can do Matterport.
Oh, they have a 209 number. Does that sound right?
Yep.
Yeah.
Yep.
Okay.
Can you put it on GroupMe?
I can.
What?
Thank you.
Oh, me or?
Anybody?
No.
39.
It's on Google. 39pixels.com.
Oops.
I'll put it real quick. I have it up on my screen.
All right. That's good because my email didn't have a phone number on it.
Mm.
All right. So there is my tax information for you and what I would advise for you to do. Keep it clean and keep it nice as far as keeping a separate account. Don't do business transactions out of the personal account or don't do personal transactions out of the business account, and keep your business transactions out of your personal account and just keep it cleaner. And if you have to, right, you may be like, Amy, I haven't had any closings. Like, how do I have a business account? Well, then you
Yeah.
have startup income, right? So you're going to have to transfer funds from one account into your business account. And you want to track that as startup funds for your business. Okay. And still have those expenses coming out of your business account. And that way it's really easy to track. You can print up your summary for the year and you know exactly how much money you spent on business crap. Okay, if that's the worst you do. But I would highly recommend doing a profit and loss statement. Get in the habit of doing a profit and loss. You can look at the MREA, at the economic model. It details what that is in if you're doing like a QuickBooks small business plan, the MREA chart of accounts is in your PC Peeps folder, and you can upload that chart of accounts into QuickBooks. And then you can categorize everything appropriately from the very beginning. There's probably some other systems that allow you to do that as well, but that chart of accounts is in there for you to utilize, and it allows you to group things appropriately. So when you look at like how much of a percentage of my income am I spending on marketing or on tech or on wages and salaries or whatever, that you can keep it in alignment with the MREA model. Because who doesn't want to be a millionaire real estate agent, right?
Did you say monthly, Amy, to do that?
Yeah,
Profit and loss statement?
Yep, do your profit and loss statement on a monthly basis, because that'll show you where you're at in your business as far as profit and loss.
Mine would be all red because it's all lost right
Well, eventually it won't be.
Me too.
Eventually
Oh,
it
yeah.
won't be. Sam, hopefully yours will be sooner rather than later.
I hope. Fingers crossed.
So you said it's called a chart of accounts in the
Yep.
PCPs?
Yeah, it should be MREA chart of accounts.
Mm,
All right. Any other questions with regards to your taxes or accounting methods?
Is it MREAPL?
Could be, yes.
It says income, expenses, cost of sales. Does that sound right
Maybe.
on the spreadsheet?
Yeah, probably.
Okay.
Amy,
Yes.
just a quick question. So when you say business account, like do you, even for us when we're just starting, would you suggest us opening up an actual bank account, but under a business account, or just were you just meaning like, hey, get two accounts and one is personal and one is your business, but not an actual business account from your bank, if that makes sense?
Correct. Yeah, it can just be a personal account that you do all your business out of.
Okay.
It doesn't have to be an actual business account. They usually like to do a personal account and keep track of all of yours is usually free, versus a business account. Usually you have to like pay money to have. So I'm totally
Okay.
good with free.
When I was told you take your check and you divide it into threes, and you put a third away in a savings account for taxes, a third for your expenses, and then a third for whatever else. Is that true?
Good.
Yeah. So how you decide to split up your money is up to you. You know, again, if you have a tax professional, they'd be able to advise you on specifically how much to put away for taxes. If you're putting a third, it's like 33%, which is probably a little on the high side. And your tax rate really with write-offs and stuff should be closer probably to 25%, but it's never a bad idea to put away more than you need, because then at the end of the year, when you go to file your taxes, you get money out of that account and you pay the rest to taxes, but it's like you're getting a bonus. And then, yeah, you'll want to have money set aside for expenses, and then money that would be like basically paid into your pocket, right? Like your income. So that thirds isn't bad. The MREA chart of accounts is a 40% profit model. And then the rest gets set aside for taxes and expenses. So it just depends how you want to operate.
Okay, thank you.
Yeah.
I have a question.
Yep.
It's not tax related though.
Well, hold on. Let's see if anybody else has any more tax related questions. Because if we're done with the tax, then I'm going to stop the recording. So we just have the tax related questions on the recording today.
That's fine. That's why I said that.
No problem. Any other tax related questions or accounting related questions? No? All right. I almost hit end.